Joining us now is Tom McClellan from the McClellan Market Report newsletter. Tom, good to see you as always. Thanks for joining us. So talk us through this market, this recent market action. We had a bit of a pullback, started over a couple of sessions at least, a bit of a bounce, and within the seasonality, that was sort of what you were expecting.
Sure was. When I was last on with you a month ago, I was looking for a mid-June dip, and then I expected the market to rally with its hair on fire. We got the mid-June dip last week. And Monday was a great start to the hair on fire rally. There's still more yet to come.
So that Friday pullback, you think was the bottom for the short term, for two-year outlook? What are we talking? What scale of bounce from here, and for how long will it last?
I'd call that a tradable bottom. It fits well with the seasonality of both all years and with the first year of the presidential term that we're in right now. I prepared a chart for your folks, and they said they should have it up of a presidential cycle pattern versus the S&P 500. And that pattern said that we should expect a bottoming period June 17th to the 23rd. Friday was the 18th, so right in the middle of that bottoming period, right on schedule, and got a lot of people feeling fearful. Bitcoin's going to crash to zero. We're all going to die. We're never going to invest again. And, you get people talking like that and muttering to themselves about, oh, that's all horrible. And the Fed's going to screw up 9 different ways. That's a great way to put in a bottom.
I love how precise you are with your dates, Tom. You talked about fear. And I know you are watching the VIX, the fear gauge, to show just how much fear there was on last week's sell-off and what that means going forward.
Well, and the VIX was a great tell. Going into the bottom on Friday, I didn't know if it was going to be Thursday or Friday. So you get close with the predictive indicators, and then you turn to the coincident indicators to say, does this smell like a bottom? And when you see the VIX popping up above its upper Bollinger Band, then that's a good way to know that you've got a nice fearful event. I like to use, for Bollinger Band settings on the VIX, I like to use a 50-day moving average and 1 sigma instead of the 20 and 2 sigma that is the standard setting on most charting programs. I just find it gives me a little bit better indication, and getting up above the upper Bollinger Band in that way, like we did on Friday, it's not as great as if we had the VIX going to 30, but it's a nice enough indication to say, yeah, we probably got all that we needed to out of that bottom, at least in terms of reintroducing fear into the hearts of traders.
What about, we were talking about just before the break, Tom, what are your views on the direction of the dollar from here?
It's very mixed. You're asking about the dollar overall, and among the different currencies, it's going to be a much different picture among them all. I'm expecting in general, though, that the dollar is going to rise for a variety of reasons, mostly because of the lags in the banking system and the way that the yield curve changes affects the dollar later on, not immediately. So I'm expecting a rise in the dollar, not a huge rise, but upward for the trend.
Wanted to ask you about tech. We're seeing some real nice moves in names like Amazon, Microsoft. The NASDAQ closed at a record high, so did the NASDAQ 100. How much staying power do you see here in this reversal back into growth?
Big tech should lead the way higher this summer. Amazon, which I happen to own a few shares of, has had a really nice breakout from a big plateau structure. It's been going sideways and chopping in just a narrow range between about 3,000 and 3,500, which sounds like a big range. That's 500 points. But if you had a stock that was chopping between 30 and 35, you wouldn't think that was so big. And now we're seeing the upside breakout of that. When you see an upside breakout of any type on any stock, what that means is that the sellers who are defending the upper boundary of it have either given up or they run out of ammunition in there and they've decided not to sell anymore. So you've vanquished all of those sellers that were defending that level, and that makes it easier for the breakout to be able to push on through. Like I said, I own a little bit, not a huge part of my position portfolio, but that's a nice breakout to see. And I think big tech generally is going to lead the way. It should. I'm also expecting small caps to lead the way. The Russell 2000 versus 1000 relative strength line, that tends to echo the movements of the yield curve with a lag time of about 15 months. And so the steepening that we've had of the yield curve coming out of the COVID crash last year, that foretells good things for small caps for the rest of this year and into next year. We are
Even though it's flattening now?
Yes, because it matters what happened 15 months ago. There's a big lag. And so what we get to go through is the echo of what was happening 15 months ago, and that was the steepening period. The flattening now of the yield curve tells us about what's going to happen to that Russell 2000 versus 1000 relative strength 15 months from now.
Shepard Smith here. Thanks for watching CNBC on YouTube.